India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. You're watching us live from the CNBC-TV18 Motilal Oswal studio. I'm Sonia Shenoy. Joining me is Nigel D'Souza and Survi Upadhyay. Folks, interesting days for the market. Yesterday we had a bit of a soft close, but the banks really were the stars of the show. So let's see how today plays out.
Well, that's right. And no cues coming in from overnight. So
Yes.
we're going to be starting on our own ground.
Absolutely, and I think it's going to be all about tracking the money, right? Show me the money. And the money is coming through from domestic institutions and foreign institutions, and that's kind of keeping the party going, I suppose, with maybe some pause like the one we had yesterday.
I think the party is going, absolutely, right? There's no stopping that. So let's get straight to it. The big cue this morning, actually, and for the last couple of days, has been the kind of strong showing that we've got from the bank nifty, and all eyes will continue to be on that. Of course, for the overall index, yesterday was a day of consolidation, a little bit of a negative bias, but I'm watching out for the bank nifty very closely because once again we hit an all-time high yesterday. The bank nifty is now almost, nearing, getting to that 51,500 mark. It hit that 50,000 milestone. There has been large delivery-based buying in a lot of large cap banks as well. But the focus now is on private sector banks. So just if you look at HDFC Bank, right, in the last 1 month, between, the last 1 month and now, HDFC Bank is up almost 13%. It has been a big laggard, but it's now come back into action. This morning, Macquarie has upgraded a few banks, and in that, they have upgraded Kotak Mahindra Bank as well to an outperform. Macquarie says that the banks have been upgraded after almost 12 to 18 months of an underperformance. And they also talk about how it is private sector banks that are attractive, where the ROCs are expected to improve, but they have downgraded SBI. So they're a bit, underweight on public sector banks, but private sector banks is what they prefer. Interesting over there. But if you look at the overall market as well, right, large buying continues. The cash flows are coming in thick and fast, both from the FIIs and the DIIs. FIIs, almost 8,000 crores of buying is what we saw in a single trading session. So I reckon this morning as well, the GIFT Nifty is suggesting about a 25-point up move. So there could be a little bit of, consolidation with a bit of a positive bias. But given that it's expiry as well, all eyes will be on the bank Nifty and the kind of traction that we're seeing, especially in the private sector banks.
Absolutely. Let's see if we get that follow through or not. Like you guys have mentioned, of course, we don't have cues from Wall Street because of the Juneteenth holiday. However, there'll be, of course, a couple of European markets in focus today. Bank of England is having its meeting, and the expectation is that there won't be a rate cut. And this is despite the fact that yesterday, when inflation numbers came out in England, the headline number actually slipped to that 2% handle, which was great news. But then the expectation is the central bank won't cut rates over there because the services side of inflation, that is still elevated at over 5.5%, and it's trending higher than the BOE's comfort zone. The other thing to sort of look out for today in terms of when the US market resumes, the macro data that we'll watch out for, jobless claims and also housing starts. So just putting that on the radar in terms of global action today. Oil is still very much a watch point, and there's been no let-up because Brent even now is above $85 a barrel. We've had more geopolitical commentary coming in, and, the entire Middle East situation remains fairly volatile, with Israel saying that they may launch a full-blown war against Hezbollah. So let's see, there's a lot of rhetoric, and it remains fairly tense. So oil remains bid up. For us, the big numbers that we saw yesterday, FII and DII numbers, just to keep the context in mind that yesterday was a day of massive blocks, including obviously Indus Towers. So therefore, that DII number perhaps is looking bigger than what it usually does. But, that's tremendous buying, 8,000 plus 7,000 crores coming through. So some solid buying from FIIs, which also has actually turned the FPI number positive for June, which is good news. After sustained outflows in the last many months, now we are almost up 2,000 crores, actually 1,700 odd crores in June so far. And that explains the move on the bank nifty. When the bank nifty moves like it did yesterday, more often than not, it's because of FII buying, and that's what started. The question that I have in my mind is that, will the money tap keep looking as liquid as it did yesterday from the FPI side, and therefore will we get more follow through on banks? Yesterday, for the rest of the market, there was overall profit taking, and that, I mean, a couple of days is absolutely fine. If it becomes a trend, then it could start being a bit of a concern because the mid caps cooled off yesterday. Barring banks, there was no participation even on the large cap screen. So let's see if that pattern changes, whether the buy on so-called dip, I mean, yesterday's dip was, 40 points, but if the buy on dip indeed plays out as it has, the Nifty 20 DMA, we're still quite a distance away from that, but keeping it on your radar, just around the 23,000 mark. That's where the 20 DMA comes in. We're still, comfortably above that. So let's see how it goes. But yeah, yesterday was a bit of a pause.
Well, that's right. Yesterday was such a volatile day that on a couple of out-of-the-money call options on the Nifty Bank, it went from 1 rupee, 51,500 from around 1-2 rupees to 100 rupees, on the 52,000 call. And on the 51,500 went from around 20 to a couple of 100 rupees. And then the markets came down to zero because the markets ended sub that 51,500 also. We had a fairly volatile trade in yesterday's trading session. Well, today you'll have the Nifty weekly expiry as well that will play out. So that's going to be a focal point on the Nifty. Yes, you had the Nifty Bank that played out. And for the first time in this series, you have the FIs that now are, long and the clients are short. So they have, turned roles, so to say. The Nifty Bank, that's the flag bearer of the last couple of days rally, and that needs to hold its own if we need to trend up from here. But let's get to the point on the FI positioning. In yesterday's trading session, they added close on 40,000 long contracts. They covered close on 14,000 short contracts. And that's why, after a while, you have the long positioning now that is at around 54%. But I think a chart will give you a better picture to tell you what's happened in this series so far. From being net short by close to around 3.5 lakh contracts, the FIs, they covered all the shorts, and now they've moved to around 44,000 net long contracts. That's the FIs. The clients, we have been saying this, they have been getting it right? And the markets have bounced considerably. And with that sort of a bounce, well, you've seen that the client positioning has come down. They were net long to the tune of close to around 3.3 lakh contracts. That's come down, and now the clients are net short on the index as well. Well, moving on to the options data then. If you're looking at the strikes, you have the 23,600 call, 23,500 call. Well, both of them were fairly active. And you have put writing as well that we saw in a trade. Which brings us to the levels then we should be looking at. On the Nifty, yesterday's high. On the Nifty Bank as well, yesterday's high. Both of them become crucial resistance zones. So they come up for you on the screen. On the Nifty, it was 23,666 odd. On the Nifty Bank, it's closer to around the 52,000 odd mark. So that's important. And the options data suggests that the 23,200 mark becomes important on the downside. And for the Nifty Bank, the 50,500, well, that was a crucial zone when we were moving up. That was a bit of a resistance. So that becomes important as well. Stocks that I'm looking at, a couple of stocks have moved into the band. HAL, Indus Stars, as well as Chambal Fertilizer. So these stocks should be on your radar. And a couple of them came out from the F&O ban. Yesterday, you had a late surge that we saw on Sun TV. So that's one of the stocks that could be in your radar. And add to the list, JNFC as well. So some of these stocks moving in and coming out of the F&O ban. Keep an eye out on them.
Okay, thanks a lot, Nigel, for that. So plenty of stocks to watch out for this morning. And of course, all eyes will be on some of the headline, indices like the Bank Nifty, etc. But let's kickstart the show and tell you all that you can see in the next 2.5 hours. First up, we have some commentary coming in from Venugopal Gare of Bernstein, who says that with strong retail flows continuing to contribute to liquidity, the phase of forced investing continues even when FIIs have been wary. He says with policy tailwinds to earnings growth mostly factored in, it has become increasingly difficult for us to recommend significant purchases at this level. He adds IPOs have commenced and several stake sales will happen to monetize the wealth and transfer risk to public markets. Venugopal says that while at a sector level, consumer discretionary, IT, telecom, metals and transport appears as the hunting ground for stocks for specific opportunities which overlay near-term growth with long-term implied growth expectations, and some of these stocks appear in our India portfolio. To conclude, he says the bottom-up plays, though still existing, are drying up very quickly.
All right, that's Venugopal Lagare of Bernstein. A little cautious in the market given the run-up. Let's get you some money market views as well on rupee. Parul Mittal Sinha of Standard Chartered Bank says the USD INR pair traded in a narrow range between 83.35 to 83.55 in the previous week. FPI inflows and US dollar weakening helped the USD INR slip below 83.50 in the last 2 days. The pair is likely to trade in a narrow range in the near term, driven by intervention by local banks on either side. She expects the rupee to trade in a range of 83.20 to 83.60 to the dollar in the near term.
And on the bonds, Parul says the India rate stayed range-bound with a downward bias as May CPI was lower than expected Further, the global data releases pointed towards signs of softening inflation and slowing economic activity. She expects FPI inflows in Indian government bonds to continue on the inclusion in one of the major global EM indices from the end of June. Parul expects the 10-year benchmark bond yield to trade in a range of 6.9 to 7.03% in the near term.
All right, that's a view on the money markets. And with that, let's kickstart our first conversation on the show. We have James Knightley, Chief International Economist at ING, with us. James, great to have you with us this morning. And I was just looking at the expectations from the BOE meeting. And even here, just like the Fed, it seems rate cut expectations are being pushed back in many of the bigger markets. But yet, equities are not complaining. Equity markets are hitting all-time highs, including on Wall Street, of course. What's your sense of the macro setup right now? And what are your own expectations from the Fed?
Yeah, I mean, we're starting to see some increasingly positive developments on the inflation side of things. We are seemingly getting some better US numbers coming through, getting some better European numbers coming through. So this ability for the global central banks, the big major central banks, to deliver a soft landing is, I think, still buoying equity markets, but it's also giving something for bond markets to cheer as well, because the prospect of lower interest rates over the next 18 months or so is also supportive there too. So I think it's this faith that we've got that we're starting to see some softer, cooler activity numbers and some better inflation data. And that is giving the market a little bit more confidence that we're on this path to gradual interest rate cuts and a soft landing that we'd all really like to see delivered.
Well, back home in India, things are looking pretty good. I mean, recently you had Fitch Ratings raise India's growth forecast as well to about 7.2% for FY25. So growth is looking good here. We have a big union budget upon us. What is your expectation? Which way do you think the wind could blow? And overall, in the larger scheme of things, where is India placed as far as the pecking order goes globally?
Yeah, I think it's in a pretty healthy position, really. I can only really comment from a global perspective. I'm not an Indian specialist, but from a global perspective, it does seem as though the concerns about recessionary forces building, those are certainly dissipating. We've still got a pretty upbeat view on the US growth prospects and also European growth prospects as well. The biggest risks really come from the politics, and that's what we've got to be very, very watchful for. We've obviously got French elections coming up, we've got British elections coming up, and of course we've got those US presidential elections coming up as well. So, for all the encouraging news flow we're seeing now, which is lifting sentiments quite nicely, there's a lot of political risk out there that could really throw some awkward developments our way. And so I think markets are going to be a little bit cautious over the next few months.
All right. Hi, James. Good morning and good to see you in. What do you make of the Chinese economy? There were hints that maybe it's coming out of that lull and there could be a potential bounce back going by the policy action we've seen both from the government as well as the central bank. But the last few days, data has been softening yet again. How do you read the Chinese economy?
Yeah, there is a general nervousness that, yes, we are starting to see a bit of movement, a bit of support on the fiscal side of things, but it's just not that big. And I think there's a little bit of a sense of underwhelmingness about the Chinese authorities' response to some of the risks surrounding the Chinese economy. So, yeah, there's some tentative signs that things are stabilizing and at least not getting worse. But optimism on a vigorous, strong Chinese economy is certainly not there yet. And I guess also we are very carefully watching the US election for feedback on what it means for Chinese trade, for example, because if, Donald Trump does come in and does win the election in November, he's, of course, promising 60% tariffs on Chinese exports to the United States, and also, of course, clamping down on China's ability to use third-party nations to export into the US as well. So, yeah, I think, the fact that things aren't getting worse is good. The fact that the authorities are starting to do a few bits and pieces, yeah, that's encouraging. But are we looking at a return of vigorous, vibrant Chinese economic growth in the near term? I'm still a little bit cautious on that.
Okay, got it. It's a little cautious in China. And yeah, take your point on all of these big elections, right? They're really important, specifically, of course, everything that's been happening in France of late. So, yeah, we need to watch out for this. Finally, James, you mentioned that in all likelihood, we may just get the soft landing. It may be delivered by central banks as we all want. But what could be the risk, the biggest risk to that thesis? I mean, I can see maybe oil prices being one because Brent oil is now above 85. Geopolitics is a risk. I mean, but what comes to your mind?
I'm still a little bit nervous about the US jobs market. I think it's been really robust. But what are we looking for the Fed to deliver interest rate cuts from September? Well, we're looking for three things. One is more 0.2 month-on-month inflation readings, 0.2 or below. And I think that's achievable. So that's a good story. Second, we're looking for cooler consumer spending. That's been the real driver of US economic growth. And if that cools, that will give the Fed a bit more confidence that it's in a position to start moving policy a little bit looser. But the big story is unemployment. Unemployment's already risen from 3.4 to 4% in the United States. And we're starting to see jobless claims numbers rising. We're going to be watching those on Thursday. And also, we are just a little bit wary that once the unemployment momentum swings, it's very difficult to stop. So for me, we've got to be mindful that we want to see some cooling jobs numbers, a slight rise in the unemployment rate, but we don't want things to go too far. And I think there is just a little bit of caution again that things could start to slow down more meaningfully. Certainly, business surveys are pointing to quite a rapid cooling in hiring, and that's something I'm just mindful for. That could turn a nice soft landing story into what could tip it into a recessionary story. Is how quickly that jobs market swings.
Okay, thanks a lot for that. So that's setting it up for us as we begin a brand new day of trade and what you can expect from the global economy and global markets rather. But back home, we have a whole market to trade and plenty of stocks to look at. So when we come back from the break, we're going to go full throttle on the top 10 stocks that you need to watch out for. Stay tuned.
Welcome back. You're with us in Bazaar Morning Call, and it's time to boil down to the individual stocks that should be on your radar. We have our team standing by with the CNBC-TV18 list of top stocks to watch out for today. Ekta, let's kick it off with you. Sun Pharma in focus. Some US FDA troubles?
Well, yes. I expect the stock to be in the red because their Dadra facility has now received a warning letter from the US FDA. Now, the timeline is that in December of 2023, this particular plant was inspected and issued 6 observations. In April of 2024, it was classified as official action indicated, which gives you a sense that, yes, there is trouble in the facility in any case. And in June 2024, they were issued a warning letter. So, the estimates are that Dadra could contribute around $240 million in sales in FY24 to the US market. So that means it is a significant contributor to the US markets. It manufactures, it is expected to manufacture the API for Revlimid generic as well. So that would be important to note going forward. But remember that with a warning letter, what tends to happen is that production can continue. And if in case it was to get an import alert, what generally happens is that you don't get issued a warning letter before that. You straight away get an import alert. So the street is optimistic that maybe it'll just be restricted to a warning letter at this point in time. But while the stock would probably be in the red today, the losses would probably be restricted simply because the street was anticipating this to happen, and large companies such as Sun Pharma and the others have known to manage regulatory issues much better than before. So those are the 2 points which would probably work for Sun Pharma.
Okay, thanks a lot for that. Well, let's go across to Hormuz. He's watching Reliance and Bharti Airtel this morning. Hormuz, good morning.
Good morning, Sonia. And actually, the telecom data that came in yesterday will keep all three incumbents in focus. I'll start off with Reliance because Jio was the one that saw a positive number coming in for the month of April. It added 26.8 lakh users in the month of April compared to 21.4 lakh it added in the month of March. So it's an increase on a month-on-month basis. Now, when it comes to Bharti Airtel, it is still an increase, but when you compare it to a month-on-month basis, it is a reduction because it added 7.5 lakh subscribers in April compared to 17.5 lakh that it added in the month of March. But for Vodafone Idea, the trend continues of subscriber losses. The stock has been in focus for multiple reasons, but this subscriber loss trend is not reversing as of yet. It lost another 7.5 lakh subscribers in April compared to close to 7 lakh that it lost in the month of March. So when it comes to the data, expect Reliance to react positively. Bharti may also react positively, but expect a negative reaction for Vodafone Idea.
Okay, all right. Thanks a lot for that, Hormuz. Well, let's hop across to Abhishek. He's here to tell us about PNB Housing Finance and MAS Finance. Abhishek?
Well, to begin with Mass Financial, they are looking to raise funds via QIP. Sources tell CNBC-TV18 that the company is looking to raise about 400 crores, which can be upsized to about 500 crores. So the indicative size is about 1.75 crore of equity shares. Offer price is at 286 rupees per share, a steep discount of 8.35% to closing price and about 5% to SEBI floor price. Now, the BRLM are Motilal Oswal and Equirus, and calculation shows that equity dilution would be around 10.65%. Net worth will increase by more than 28%. Book value can increase by 16% to close to 125 per share. And capital adequacy ratio, now this is surprising. They are at a strong capital adequacy ratio of 24%. This can improve to about 30.5 to 31% as per my calculation. So the capital consumption in this company is only about 125-150 basis point per annum. So this capital raise has come in as a surprise. Spoke to few buy-side guys. They said the company had been looking to raise funds over the last 6 to 8 months as well. So this can impact the ROE of the lender in the near term. However, it will also reduce the cost of funds and help in net interest margin. Now, in PNB Housing, there is a block which is expected to come in. Sources do tell CNBC-TV18 that Asia Opportunities and General Atlantic Singapore Fund is looking to sell their stake. So 4.16% of equity is on offer. The price is at 773 per share, which is at a discount of 8% to yesterday's closing price. The lock-in is about 60 days post the stake sale, and offer size is about 830 crore. Now, remember that last time there was a block. It was on 28th of May when the block had taken place again by General Atlantic Singapore Fund. Back to you.
Okay, so watch out for that block deal in PNB Housing. Abhishek, thank you very much for that. Let's go across to Sonal, who's also watching out for a bunch of stocks. Sonal, which ones are these?
Well, let me start with Office Space Solutions, which is a recent listing, and they have reported their Q4 numbers, which look good. In fact, this is the first quarter where the company has seen a profit this time around. So revenues are 44%, EBITDA is up 35% to come at 65 crore rupees. This is the time when they have reported a profit of 1 crore rupees versus a loss last year of 13.7 crore rupees. If we see the last 4 financial years, it continues to be a loss for the company, but in FY24, losses have reduced to levels of 17.8 crore rupees versus 45 to 57 crore rupees that the company has seen earlier. So going with green here. For Tanfac as well, it's a positive news. They have signed a framework agreement with Japanese specialty chemicals company worth $81 million or around 675 crore rupees. This will be for a fluoro specialty or refrigerant gas, to be very specific, and this will mark their expansion into this particular segment. Also watch out for Anupam Rasayan because it is the promoter there and holds around 25.8% stake in the company.
Okay, thanks a lot for that. Let's hop across to Vamakshi. She's tracking some more stocks that are in the news this morning. Vamakshi, what are you looking at?
Well, good morning, Sonia. Let me first start off with Gokuldas Exports. The company will be investing in BRFL Textiles. They will be subscribing to OCDs of the company in multiple tranches and will be making an investment of 350 odd crores. The aggregate consideration for the potential acquisition is, however, pegged at 588 crores. This investment will allow the company to integrate backwards into sourcing high quality fabric at competitive prices, which will give the company a competitive advantage over its peers. So overall bodes well for the company. Expect the stock to open higher today. But apart from that, KEI Industries, on the other hand, is expected to open lower today, and that is because its operations have been partially affected at plants which are located at Rakholi and Chinchpada, and this is mainly on account of a labor strike. However, the company is said to be in discussion with concerned laborers, and they will be resolving the issue as soon as possible. Apart from that, lastly, let's focus in on Sapphire Foods. Expect the stock to open higher today because the board has gone ahead and given its nod to a stock split in the ratio of 5 shares for every share held.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's do a quick recap then of all the top stocks we just covered for you. The ones with positive news flow include Reliance Industries, MAS Financial, Office Space Solutions, Stanfac, Gokuldas Exports, and Sapphire Foods. All of them will be reacting to positive news flow, while 4 stocks will be reacting to negative news flow overnight. Sun Pharma, Bharti Airtel, PNB Housing Finance, and KEI Industries. Well, that's about the equity market, but let's hop across to Manisha Gupta, who's joining in to tell us what's going on in the commodity space. Morning, Manisha.
Morning, and thank you for that, Nigel. Well, China keeping its lending rates unchanged as expected is something that has boosted the markets right now. So I'll start talking about crude oil prices first, because we've seen support continue into this one. 85 is holding. It's at 7-week highs. There are also escalating tensions in East Europe, Middle East, and then all the international agencies, whether it's OPEC, IEA, EIA, have predicted firm global demand growth going forward. And then we're also into a season where Atlantic season sees storms, and the first tropical storm by the name of Alberto is bringing a lot of coastal flooding across South U.S. coast, and that is Gulf of Mexico as well. And that premium also will start building into prices. Good gains continuing in case of metals as well, where copper is off its 2-month lows, and we've seen prices continue to gain up because of concerns of availability of ore, smelter output cut in China, operational setbacks in Chile. So all of those factors have been supportive for metals as well.
Okay, all right, got it, Manisha. Thanks very much for that. Alberto, I'm always fascinated with the way they name these storms. Okay, but Manisha, before we let you go back home, here there was an increase in MSP on a range of commodities yesterday. Just take us through that and how the market may interpret it.
Oh, well, yes, there are 14 crops for which the Kharif MSP for 2024-25 has been announced. When you look at the MSP hike range, it is between 1.4% to 12.7% on the higher side. Paddy, which is the most popular of all, has seen more than 5% of increase in MSP. But the max increase clearly seems to be coming in for these core cereals and millets, where there is a lot of push from the government. Pulses has been a bit of a concern because there the inflation has been higher, and import for many of these pulses is duty-free right now. So we've seen 6 to 8% of an increase in MSP there as well. In case of edible oil, it has been a moderate 5 to 7% increase. But when it comes to cotton, it is nearly 7% of an increase. And, the biggest increase really comes in for something like a sesame or a Niger seed, where we have seen price increase of around 11 to 13% increase there.
Okay, thanks a lot, Manisha, for that. So lots of updates on what's happening in the world of commodities. Let's take a quick commercial break on that note. On the other side of the break, Dipan Mehta of Elixir Equities will be with us to talk about some fundamental stock analysis. Stay tuned.
Welcome back. Hope you're having a good morning. Well, let's get to some fundamental analysis on all the stocks we just discussed for you. Dipan Mehta, Director of Elixir Equities, joins us on the show. Hi, Dipan. Good morning. Good to see you, Ben. Well, on Sun Pharma, there was some negative news flow that came in with regard to their Dadra facility. What's your view on the stock at these levels?
Good morning, Nigel, and thank you for having me on your show. I think it's a minor setback, and the company has been able to navigate such issues pretty well in the past. So I'm sure that remedial measures will be taken. But the more important thing is that Sun Pharma is following a completely different trajectory as compared to some of the other pharma companies. And its focus on specialty products is going to be a game changer for the company. And eventually, I think it will result in very strong revenues and profits, I would say sustainable, and higher valuations as well. But we need to wait to maybe a soft FY 24-25 as they invest more and more in specialty chemicals through higher R&D spends. Valuations are reasonable, but I think that this is one stock that one should keep in the portfolio for a long period of time. It will provide safety as well as defense in the event of any turmoil in the market. Having said that, it's a company in which we and our clients are invested in as a measure of disclosure.
Okay, Dipan, hi, good morning. The stocks that, we're watching very closely are the banks, right? I mean, Kotak Mahindra Bank has been upgraded this morning by Macquarie. HDFC Bank is up almost 15% in the last 1 month. You think the time has come to load up further on private sector banks? And if yes, what does your pecking order look like?
Good morning, Sonia. Every day I look at the P multiples of all the companies. And when you come to the conclusion that the cheapest category is the private sector banks, of course, PSU banks are even cheaper, but the cheapest category of stocks is the private sector banks. They are trading at P multiple price to book lower than what their averages have been for the past 5-10 years. Yet growth rates are still pretty much intact. For example, a private sector bank can grow at 15-17% easily, and their valuation is anywhere between 13 to 20 times or so. So from that point of view, there's valuation comfort and there's good earning visibility as well. And in overvalued markets like this, investors are looking for cheap stocks, and that's where private sector banks play an important role. So very, very positive on all private sector banks. You can pick and choose, I think, whether it's Kotak, IndusInd, Axis, ICICI, I think all of them should do well. Our personal favorite is ICICI Bank and IndusInd Bank, purely on account of the growth dynamics, the quality of leadership, tech platform, and the basic franchise and customer, customer branding. So I would say that you should be overweight banks. Maybe the next leg of this bull market upswing could be led by the banks, and one should be very cognizant of that.
Okay. All right, Dipan, hi, good morning. Thoughts on Vodafone Idea, given that we had this massive deal yesterday, and I think there's a lot of speculation around now what will the parent do with all the money? Will some of it be infused back into the Indian entity or not? So that's one aspect of it. The other is the ground reality, right? We also had the Telecom subscriber data come in yesterday, and Vodafone is still, of course, losing subscribers till that confidence really comes back. Stock has done well, of course, if you got the trade at the right time. But what now?
See, I think stocks like Vodafone are good in bull markets like this. It's low priced, attracts a lot of traders, huge volumes take place. But what are the underlying fundamentals? I think last when I saw the company, unless it grows its revenues by 40-50%, it can't even look at breaking even. Of course, cost may go down because of further equity dilution and conversion of debt into equity. But it's not a very positive figure for Vodafone. The equity is going to be so bloated that servicing it in the future is going to be a big challenge. And one cannot really value this company based on price to earnings multiple, like the way you do for Bharti Airtel or for Jio. So I would say that it's a great trading story. It keeps coming in the news because of something or the other. But end of the day, on a fundamental basis, hand on heart, we cannot recommend buying Vodafone.
Yeah, all right. Dipan, I wanted to ask you about Maruti Suzuki. The last couple of days, the stock is down close to 6%. I'm sure what's taken place, but I think last 2 or 3 sessions, it's lost 6.5%. Your view on the counter, will you look to buy the dip?
No, Nigel, I think just wait and watch. There'll be a lot of frenzy around Hyundai's IPO and IPO listing as well. And some amount of holdings, core holdings may shift from Maruti to Hyundai as well. Hyundai has on certain parameters is better than Maruti. The fact that its market share is slightly lower, to that extent, it has got space to take it higher. And I think some amount of lull is coming in auto sales as well. We saw that with the FADA figures as well. So one could expect 2-3 soft quarters for the entire auto industry, Maruti in particular as well. But look, the long-term story is pretty much intact. And all from Maruti, all we can expect is, what is the strategy for EVs? And if that is, something which the market likes, then that would be a trigger point. But nonetheless, I think it's a good secular growth story. Uncertainties around parent company and merger of the Gujarat plant, all those are well behind us. And it has got some phenomenal strength in the market. But as I said, one should expect a few soft quarters for Maruti and the entire auto industry.
Okay. The other space I wanted to ask you about was some of these consumption stocks, right? I mean, we've seen a big comeback, whether it's in names like D-Mart, names like Varun Beverages, both sitting at fresh highs despite really steep valuations. What do you think is happening here? Is there a next leg of an upcycle that's due in these names?
See, Sonia, whenever a highly priced, highly valued stock is going up, all I can interpret, and this is my theory, mind you, is that existing fund managers are buying the same stock they're already invested in. Because fresh ideas in this market are extremely difficult and rare. So if you're doing a portfolio management scheme or you have a small mid-cap fund, you get fresh money in. What do? You buy the same stocks. And stocks like Varun Beverages and DMart, they have hardly any liquidity. So, 1-2 lakh shares also, if you buy of a company like this, can take the stock price up by 3-4%, 5% in markets like this. And then once you see a stock going up by 2-3%, automatically the day traders and the speculators come into play as well. So highly priced stocks are moving up just because of that. On a fundamental basis, you cannot be buying a stock at 100 P multiple, especially if it's a physical business like Varun Beverages or DMart. These companies have constraints when it comes to growth rates. They cannot grow at 40-50% on a long period of time. So you need to be a bit careful and not get drawn into buying such high valued stocks. I mean, we discussed banks. I think banks, software companies, pharma companies, PSU banks. I think these are the sort of areas where valuations are just about on the higher side. They are not crazy valuations as of now. That's why I think fresh money should be put, if at all you want to put into fresh money. But our advice is to try and gradually increase the cash levels in the portfolio.
Okay. Got it. Two mid-caps, and these are old companies that have been listed for a long time. But I wanted to, check with you. One is TTK Prestige, and the other is Gokuldas Exports, and both are in news today. TTK Prestige because they're apparently getting a global consultant to now come up with the 5-year growth plan. Stock on a longer time frame has been an underperformer. It hasn't done much. I mean, if you look at the last, let's say, 2-3 years. And ditto for Gokuldas, one of the biggest exporters, apparel exporters out of India. They are, of course, looking at an acquisition. Any thoughts on these two?
See, I think TTK Prestige is fairly valued, but growth rates also have slowed down and competitive intensity in their categories has increased significantly. But look, it can grow at 10-12% on an extended basis for several years or so. So if you're an investor, I would remain invested. Gokuldas Exports, on the other hand, is something which I have on my market watch screen. And I think that it's got a very strong position. The acquisition, I think, in the UAE was very positive for the company, and it was in the limelight a few months ago, but it has cooled off now. I think at the right price point, when it's available at a reasonable P multiple, this could be a good addition to any investor's portfolio. End of the day, I think that they're going to only increase their footprint globally. And as and when I think, this overall the economies in US, Europe, and overall consumption picks up over there, companies like Gokuldas Exports will really benefit. And more, I think the large retailers want to work with large Indian companies. There's also a China plus one or Bangladesh plus one kind of strategy playing out over here. And I would say exceptional management from Gokuldas to make such a huge success in a very difficult industry. So it's on my watch list, and at reasonable valuations, at a correction, 15-20% type of a correction in a market where I think would be in a slightly corrective market, would be a good strategy for Gokuldas.
Oh, okay. Just to point out, in the news on Gokuldas, they are subscribing into BFRL through optionally convertible debentures, and it's going to happen in tranches up to 350 crores. And then by June of next year, the company could take a call on a complete all-out acquisition of that entity as well. So it's interesting. We'll try and touch base with the company as well as we go along. But for the time being, let's take a quick break, come back with more on the other side.
Welcome back. Well, the GIFT Nifty is suggesting a start in the green, but yesterday was really volatile, so don't be surprised if the volatility kicks in today as well. The focus area, of course, has been banks, but apart from that, there was a lot of trepidation, especially in the broader markets. Dipan Mehta is still with us. Dipan, I wanted your thoughts on M&M because the market cap of M&M has now reached almost 3.7 lakh crores. And, the stock has already gone up 71% this year. Do you think the run is done here, or given that we have a positive monsoon situation upon us, maybe there could be more upsides in names like M&M?
Sonia, first of all, excellent interview with Anisha. I've been watching it on the show. He was really very positive and was able to communicate M&M strategy really well. I think that not only has the company done well, but on the investor relations front and explaining their strategies, they have done exceptionally well as well. This is one stock you should be overweight within the auto space. I think that it may outperform Maruti as well. Its growth rates are higher. its product strategy is better. It's got a coherent EV or model ecosystem as well. And valuations which were earlier quite attractive now are at industry levels. And the most important thing in M&M is it is very agro focused. With good monsoons, increased impetus to agriculture and NDA3, this is one company which can do very well. Not only is the farm equipment, of course, totally dependent on and on the agriculture sector, but a lot of the UV sales, especially lower end UV and SUV sales, are in the rural sector, and they have a superb, distribution bandwidth within the semi-urban and the rural area. So very positive on M&M. Again, the disclosure required over here.
Okay, got it. Thanks, Deepan, for that. We'll have just more questions for you in a minute. Let's put the spotlight on the telecom space. So much has been going on. Yesterday was all about the mega Indus block deal. And of course, we've got the telecom subscriber numbers as well overnight. Reliance Jio and Bharti Airtel, both of these have actually added subscribers in April, but Voda Idea has seen a loss. Axis Capital is bullish on Airtel and Reliance. So what is the outlook on the sector and some of these specific companies? To talk about this, we have with us Gaurav Malhotra, Executive Director at Axis Capital. Gaurav, great to have you with us on the show. Lots going on in the sector. I'm not sure if you do have any coverage on Voda Idea right now, and even if you don't have a stock call, that's fine. But just tell us what you make of all the developments. Now, there's a lot of expectation that maybe with the parent, selling its stake in Indus, getting so much money, maybe some of that will make its way back into the Indian entity over here. I don't know if you believe that can happen or not, but because at the ground level, there's still subscriber loss. So what are your views on Vodafone Idea at this point?
Yeah, hi, good morning, everyone. On Vodafone Idea, unfortunately, we are restricted, so won't be able to, give views on that. But otherwise, in terms of, if we look at the subscriber trends, these trends are basically in line with what we have seen in the last few quarters, which is essentially Jio being the leader, followed by Airtel, and Vodafone seeing some loss, slightly lesser than what it was experiencing earlier. But obviously, the network needs to strengthen before we see some sort of reversal for Vodafone Idea, which should happen, now that the fundraise has happened at Vodafone Idea's level.
I wanted your thoughts, Gaurav, hi, good morning, on Bharti Airtel. You've upgraded their mobile revenue and their EBITDA by about 6 to 13% for FY26. What makes you so bullish on Bharti? Because we've seen a fairly steep rally in many of these telecom names in the past 1 year. But from here on, what could the fresh triggers be, you think?
See, the stock of Bharti is essentially moving up on the back of the tariff increase expectation, right? We are sort of in line with that view. The only different view which we have versus the street is that there seems to be an expectations of 2 hikes, say this year and one next. We feel that consecutive hikes is a little bit less in probability given what we have seen in the past. But whenever that hikes happen, they happen quite meaningful. So that's why we have sort of taken up. We have assumed a hike of around 25% for the sector for this year. And that is what has led to this sharp increase in our estimates for Bharti. And the same thing is true for Jio as well.
Hi, Gaurav. Good morning and good to see you. In any view on Indus Stars, you had that large trade that the street was waiting for, which got out of the way. Now there'll be some kind of MSCI and FTSE rebalance as well. Do you all have a call on the stock?
No, so right now we're restricted on Indus also, so unfortunately won't be able to give any views on that.
Okay, the other trigger that the telecom space was watching out for was tariff hikes. As you said, you're expecting around 25%. Talking about, 3 players surviving out here. And the other one that you briefly mentioned was on Jio. The street is waiting for a potential IPO on Jio as well at some point of time. How do you value it and what numbers are you working with?
So the way we think about it is that, for Jio, we expect listing sometime during FY26. So say from sometimes, maybe could be middle of FY26. Our current gross EV, enterprise value of Jio is roughly around $130 billion, and Reliance owns around 2/3 of that. So I think it's going to be a meaningful IPO, as and when it happens. And at that point in time, there will be 2 large liquid stocks in the sector, mega caps, which investors will then have an option to play with.
Okay, we will let you go on that note. Thanks a lot for joining in and have a great day. That's the word on the telecom space. But let's get back to the market because we have an entire market to trade now. Mitesh Thakkar and Shilpa Rawat are joining in. Lady and gentlemen, thanks a lot for joining in on the show. Mitesh, let me begin with you. The market has, sort of consolidated around these levels, but we've seen big traction. Okay, actually we'll go to Shilpa first. Well, as always, ladies first. Shilpa, good morning and thank you for joining us on the show. I wanted your thoughts first on the Bank Nifty because it's hit an important milestone of 50,000, now inching towards 52,000. Do you think there's more to go? And what are the levels to watch there?
Good morning, Sonia, Nigel, and Sylvia, and thank you for having me on the show. Talking about the momentum and the sentiment for the market, it is very, very positive. In spite of the monster rally that we saw yesterday on Bank Nifty, we see that the strength is still very strongly intact, and now particularly in all the frontliner private banks, be it ICICI Bank, be it Axis Bank, be it Kotak Bank, they all are showing very robust trend, and the support base built up as per option chain data. If you look at that's completely on immediate basis, and an upside potential for all these stocks for another 7 to 10% is something that cannot miss out from here. So I believe Bank Nifty on any dip towards 51,000 as of today also, I believe should be some buying area where you should go long and look for targets towards 51,700 to 52,000. And Nifty also, we see that 23,400 is now acting as a very strong support base. The the elevation of the support base by put writers convincingly definitely reflects on the sentiment that Nifty will also eventually move towards 24,000.
Okay, all right. What about individual stocks, Shilpa, that you have for us for today?
Yes, Nigel, like I've said, the private banks you cannot miss, though particularly it should be ICICI Bank. ICICI Bank, if you see the option chain, the support base is completely very strongly placed at around 1130 zone. So this should be the support area. I mean, the stop loss would be around 1125 from here, and look for targets of 1180 to 1200 on immediate basis. The other one would be India Mart. India Mart also, as of yesterday, we saw very high volume participation and the stock trading closely around 2600. I believe, it is very well placed to move towards 2800. So with a stop loss of 2550 and on any declines that you find today should, be an opportunity to go long for targets of 2800 from here.
Okay, thanks for that. Mitesh Thakkar is with us. Mitesh, there's a very interesting market on our hand, right? On one hand, you have the headline index, which is consolidating, but now there's new leadership emerging, not just banks. Yesterday was a good day for a lot of large cap IT names as well. Where do you see the leadership now over the next couple of days? And purely for today, what are the stocks that we should be looking at?
Good morning. So I think, yes, there's some kind of a sectoral churn happening, no doubt. I think, we have seen good traction and momentum come into the IT names in the last few days. There is sign of, early signs of that the IT names could have possibly bottomed out, and therefore they should do well. The private sector banks in the last 2 days have come into and started showing good traction. So I think that's where the focus should be on the long side. But I think I was also cautioned that there is some signs of profit booking on the intraday and the hourly and the 2-hourly chart. So I think we could see a market which would be slightly choppy. But if we don't break the 23,400, 23,380 zone, then I think we should be okay. And with 1-2 days of choppiness, the market should regain strength. So you should be looking at exploring long names in the financial and the IT sector, and look at try and find some shorting opportunities in the rest of the bank.
Okay, all right. Hi, Mitesh. Good morning and good to see you in. What about individual stocks that you're tracking for the day?
Nigel, I have, after a long time, I have a mix of buy and sells. Yesterday, we had one sell on Ikka Lab that worked very well, but today I've got two. And from the auto names, Bajaj Auto, I think, is showing signs of pullback and profit booking. So sell with a stop at 97.75 for a target of 94.60. A similar setup on the charts of Maruti, which I would recommend selling with a stop about 12,400 for targets of 11,900. And on the buying side is Kotak Bank, stop at 17.24, target of 17.90 here. And Infosys, which I would recommend buying with a stop at 14.97 for targets of 15.40.
Okay, thanks a lot for that. Well, let's do one thing. Let's take a quick commercial break. I think we have about a couple of minutes to go before the pre-opening rates. But in the meantime, we'll also get you some F&O cues. Chandan Taparia, Derivative and Technical Analyst at Motilal Oswal Financial Services is with us. Chandan, hi, good morning. Good to see you in. What are the stocks that you're looking at this morning? Where do banks feature on that list? And overall for the index, what are you targeting?
Good morning, Sonia, Nigel, and Surabhi. Thanks for having me. So both the indices, Nifty and Bank Nifty, made a new lifetime high on the last trading session. Nifty made high at 23,664 and Bank Nifty made a record high at 51,957. So momentum is intact, but we witnessed some profit booking decline from higher levels. So first talking about the Nifty, it has been finding sustained buying interest at every important zone and supports are gradually shifting higher. However, we have seen some change in the data setup as volatility has seen some spurt from the lower levels and India VIX and PCR is slightly drifting lower. So that indicates some sort of consolidative move could be there, but we will continue to be with major trend that is buy on decline. We suggest that till Nifty holds above 23,250 zone, utilize any small decline as a buying opportunity and the market has all potential to head towards the new milestone of 24,000 level. Now talking about the Bank Nifty index, Bank Nifty has seen a fabulous run on the last trading session. It outperformed the broader market, made a new lifetime high towards 51,957. We have seen participation in counter like Axis, HDFC Bank and most of the private and PSU. So here trend could remain intact. We have surpassed the previous lifetime high of 51,133. So now till it holds above immediate support zone, we are expecting this run up to us 52,000 to 52,500 level. Now looking at the stock wise, first trade is buy on Axis Bank. It has given a consolidation breakout of last 10 trading session. We have seen a volume surge with put writing activity, which indicate that fresh leg of rally could be seen. So one can buy with support of 1200 and expecting Axis Bank to head towards 1280 level. Second trading idea, there is buy on Chambal fertilizer. Again, the monsoon could be in focus and monsoon smile can add the momentum in fertilizer name. So Coromandel, Chambal, these are the couple of names could be in positive momentum. So here we are recommending to buy on Chambal with support of 455. And as per its consolidation breakout, it can head towards 490 level. Last trading idea, there is buy on ITC, there is sell on ITC. We have seen some selling pressure. It is trading below its key moving averages. It has been making lower top, lower bottom on the lower time frame. So expecting some 4 to 5% profit booking decline in ITC. So recommending to sell on ITC with hurdle of 434 and it can drip down towards next support of 400 levels.
Okay, thanks a lot, Chandan, for that. Have a good one. Well, let's step into a quick break. When we come back, the pre-opening rates. We'll also have Sriram Veluyudayan of IIFL Securities as Vodafone has sold 18% stake in Indus Towers. What does this mean? More on that coming up. Welcome back. This is Open Exchange live from the CNBC-TV18 Motilal Oswal studio. Well, let's do one thing. Let's get a couple of stocks on board now. Vivek, my colleague, is joining in. He tracks all the block deals and there's been so many lately. So Vivek has his hands full. Vivek, good morning.
Well, good morning. You're absolutely right. Yesterday was a very busy day as far as the bulk and block deal windows were concerned. Almost 7 companies where you actually had more than 1% of equity change hands. First on a list, of course, is Indus Tower. The total block size over 15,300 crore. Vodafone PLC sold 17.98% stake. Amongst the buyers, the disclosed ones, Bharti Airtel bought 1%, upping their stake to almost 49% now. The other large buyer in trade was SBI Mutual Fund. Now, key to track will be the weightage increase that Indus Tower will see both in FTSE as well as MSCI. The second company on the radar was Gland Pharma. Block size of almost 1,750 crore, where Fosun Pharma sold 6%. Amongst the key buyers was UBS Principal. The third company, one that we reported yesterday, was ZF Commercial. Size of the block over 2,100 crore. Wapco Asia sold 7.7%. Remember, the block size was upsized yesterday. Amongst the key buyers, Kotak Mahindra, Nippon, and SBI, all 3 mutual funds. Sunsain Engineering, remember, 11% equity. It was a clean-out trade. The 2 sellers were 2 strategic investors. Employee Ebane Limited, 2.3%. Client Ebane Limited also sold 9.3%. Amongst the key buyers was Amundi India Small Cap Fund, HDFC, ICICI Prudential Standard Life Mutual Funds, Morgan Stanley, SBI, as well as Society General. AU Small Bank, one that slipped under the radar. Yesterday, Westbridge AIF sold a little over 1.9% stake yesterday. Amongst the key buyers was Goldman Sachs Investment Mauritius Fund. Advanced Enzyme Tech, here too, quite a large deal. A strategic investor, OrbiMed, who has other investments in healthcare companies, they sold 1%. Motilal Oswal Financial Services was the buyer. And Shiley Engineering Plastic, almost 4.4% equity, was sold by Lighthouse India Equities Fund. This total amount was over 135 crores. So almost 7 large block deals where more than 1% of equity changed hands yesterday.
Okay, well, thanks a lot for that. Let's do one thing. Let us get the pre-opening. I think the pre-opening rates are just going to be kicking in right now. So let's get it on board. The first tick is in the green, expectedly 60 points higher. Very interesting, actually. The market, after having a big rally in the last many days, is consolidating, but building onto its gains in different sectors. So yesterday, while the headline index was down, banks were up, IT was up. So let's see how today shapes up. Do banks participate more? Does IT get more of a seat at the table? All of that we'll find out in the next couple of hours. But for now, things are not looking bad at all if you're a bull. But let's discuss how the Indus Tower block deal will affect the MSCI and FTSE weightage for the stock. Sriram Velayudhan, who is the Vice President Alternative Research at IIFL Securities, joins us now to discuss the FTSE June quarterly index review changes which will come into effect from tomorrow. Sriram, thanks a lot for joining in. How do you think this large trade really would affect the weightage, and what do you think the overall impact would be?
Hi, good morning, Sonia. So post yesterday's block offering in Indus Towers, FTSE indices will see a weight up tomorrow. We expect inflows of $55 million across the key FTSE indices like All World, All Cap, All Cap emerging markets. There are apart from this weight up in Indus Towers, there are a couple of key weight up events as well in FTSE indices and sensex 30. In the case of sensex 30, Adani Ports will get added in place of Wipro. In terms of flows, Adani Ports should see inflows of roughly $240 million, while Wipro should see outflows of $200 million. Coming back to FTSE indices, there are 5 additions across All World and All Cap indices. In All World Index, which is MSCI standard equivalent, Tata Tech, JSW Infra and IRIDA are getting added. These 3 are additions in All Cap as well. Apart from these 3 stocks, Cello and Hunasa Consumer will get added to FTSE All Cap. Aggregated FTSE rebal will be $680 million net inflow even for India.
Okay, all right. Hi, Sriram. Good morning. Good to see you in. First on Bharati, on Indus Towers, since that last trade is out of the way, the FTSE rebound should be $55 million, if I got that correct. And there'll be MSCI as well, right? What is the total number?
Correct, yeah. So, Nigel, so aggregated MSCI and FTSE, we are anticipating $155 million worth of inflows in Indus Towers, while FTSE sources the data which gets released on the exchanges. MSCI weight up will happen after the shareholding disclosure takes place.
Got it.
That will be $100 million inflow event.
Got it. So $155 million on that. The other big talking point has been HDFC Bank. Some believe this move that we have seen is a fundamentally driven one, while others believe that maybe there is hopes that there could be some action from the MSCI front. Could you tell us what are you anticipating? Because it was very much touch and go there with regard to the inclusion.
Right. So, Nigel, this is a weight-up event which the street is closely following. For the May review, the stock missed a weight-up by 4 basis points in terms of a foreign room. So, it required 25% or more. It was 24.96%. So, it missed by a very, very wafer-thin margin. So, rightly pointed out, this again has been right up there. It's closely followed by the street. What we did at IIFL Alternative Research was we have looked at few primary data points and May, and data, fortnightly basis. The FPIs have been selling across financials in April and May worth $2.14 billion. And our assessment is a large part of it is likely to be HDFC Bank. Second data point which caught our attention was equity-focused mutual funds, ex of passive funds and arbitrage funds have increased their holding in HDFC Bank by 67 basis points. Right. So on one hand, we have domestic funds increasing the stake. Other hand, we believe that the supply largely would have come from the FPIs. So all these data points makes us believe that there is a strong possibility of a weight up happening in HDFC Bank in the August review. If at all, this weight up happens, the event should be 2.6 to 3 billion net inflow even for the stock.
Yeah, that would be a massive one, Sriram. That would be huge, absolutely. So August, August is a review. You said last time it missed by 4 basis points, right? The FPI headroom should be 25%, correct?
Correct.
So
right.
effectively, I mean, I know tough to sort of guess these or calculate these. How far away from that threshold do you think HDFC Bank would be right now? That 25% FPI limit.
Sure. So, Surbhi, basis the last quarter shareholding, FPI aggregated holding in HDFC Bank was 55.54%. This has to come off to 55.5% for a weight up to happen. So, roughly 4 basis points in terms of room as well as absolute holding.
Okay. So that's the big one, obviously, for the MSCI August review. Anything else? I mean, a little early, but anything that you're already working with in terms of the August review? Any other stocks to watch?
Yes. The Street has already started evaluating the August 24 MSCI review. Few stocks on our radar at this juncture are Vodafone, as potential inclusions are Vodafone Idea, Prestige Estates, Oberoi Realty, Zydus Life Sciences, Schaeffler, Oracle, RVNL, Linde, Alchem and Dixon. Unominda as well, it's there. Unominda right now is a medium probability event. We will have to evaluate how the price action is. As you rightly pointed out, still a lot of time left for the cutoff.
All right, Sriram, we leave it at that. Thanks a lot for that. So, Street has started evaluating the August 2024 MSCI review, and a couple of these stocks, Unominda, Oberoi, Prestige Estates, Vodafone Idea, are potential additions. Got that. But let's get back to the pre-opening rates. The Nifty has settled about 0.3% higher. So it looks like it's going to be a decent opening. Mitesh is back with us. Mitesh, what's the call at 9:10?
I'll go with a buy on Kotak Bank for targets of 17.90.
Okay, a buy on Kotak Bank with sorry, I didn't get your target. What is it? 17.90, is it?
That's right.
Okay. So, well, Macquarie has also upgraded Kotak Bank. So, it looks like that's the stock of the moment. But let's do one thing. There are a couple of more interesting upgrades and downgrades that have come in from Goldman Sachs this morning. So, my eye is on that. Let's first start with Unominda. Goldman Sachs has initiated a buy on Unominda. It is one of the strongest stocks, as we know, in the auto ancillary space. They have a target price of 13.50. They talk about how the company is well positioned for growth in the Indian auto component industry. The big benefit that Unominda sees is from the shift to premiumization, especially in SUVs, premium motorcycles and EV scooters. And Unominda currently enjoys 50% market share in auto switches and 40% in four-wheeler alloy wheels. So that's one stock. The other one is CE Info Systems. Goldman Sachs has initiated a buy with a target price of 2,800. They talk about how the company is well poised to benefit from the leadership position in automation navigation, mapping devices and connected vehicles. But on the flip side, they have a sell on Tata Technologies, and it's largely because of valuations. They have a target of 900 rupees on the stock, so there is a downside expected. They say the company is trading at a steep PE of 50 times FY26. So that makes them a bit uncomfortable. And they also talk about how Tata Motors and Jaguar Land Rover relationship could make broadening of the luxury automaker customer base harder in future. So they're worried about how they have a very high, revenue contribution just from the core Tata Motors and JLR business, and broadening of their order book is something that, looks a bit tough.
Okay, all right, Sonia, thanks a lot for that. Well, let's get in Abhishek. He's joining to tell us about a Macquarie note that's talking on banks and various NBFCs. Abhishek?
Well, to begin with, Macquarie has written on financials wherein various stocks have been upgraded and downgraded as well. To begin with upgrade, they have upgraded Kotak Mahindra Bank and City Union Bank from neutral to outperform. They say that these stocks have underperformed in the last 12 to 24 months and valuations are cheap and risk reward is favorable right now. They have downgraded SBI to underperform from neutral after the recent outperformance and given the fact that ECL provisions will kick in, return ratios will get impacted and possible equity capital raise as well. On NBFCs, they have downgraded Bajaj Finance, Chola, MMFSL from neutral to underperform given the lower loan growth that they see as well as falling ROEs and a delayed rate cut cycle. On the insurance front, they remain cautious on the overall insurance pact. However, they have upgraded SBI Life to outperform from neutral as it is less affected by the IRDA regulations and they expect it to deliver industry-leading 15 plus growth in the VNB segment and valuations in that context are reasonable. So they have increased the target price for Kotak Mahindra Bank, City Union Bank, SBI Life as well as Bandhan Bank which are up on screen for reference and they have decreased the target price for SBI, M&M Finance, Bajaj Finance as well as Chola Mandalam. Back to you.
Okay, got it. So interesting. Several changes there coming in from Macquarie. Abhishek, tell us about DCB Bank. There's a Motilal note here.
Motilal after 5 years has upgraded DCB Bank to buy from neutral. Target price has been raised to 175 from 155 earlier. They said that the business growth remains steady and valuations are reasonable right now. So operating profit leverage will drive the ROE efficiency or ROE recovery for the bank. They expect 19% CAGR in revenues over FY24 to 26, stable margins as well as steady loan growth. So with a recovery in loan growth and anticipation in respect to improving operating leverage, they estimate 21% earnings CAGR over the next couple of years. So they estimate ROA and ROE to reach about 1% and 14% in FY26. Remember that FY24, the ROA was about 0.9%. So current valuation with respect to price to adjusted book value of 0.7x, it seems attractive for investors as per Motilal Oswal. Back to you.
Okay, thanks a lot for that. That's DCB Bank. Mitesh, you want to come in on that? A quick check on DCB Bank and whether there's further upside there?
See, I think the stock has had some kind of run-up and now it's close to levels of 145, 146. If you look at the last 3 months data, 4 months data rather, Feb of 24 we had a high of 128 and then April we had a high of around 139 but a closing at about levels of, a high of 144 and a closing at about 139 levels. So this 145, 146 band is a very important one. I think I will want to buy it once we clear this level.
Just wanted to point out that SBI Life is already taking note of this Macquarie call. They've upgraded SBI Life, saying that it's probably better placed and it's going to be one of the insurers that will be lesser impacted with the surrender value norms. It's actually the top performing stock on the Nifty right now. So let's see if we can actually build on it. That one stock is definitely taking note of the Macquarie call today.
It's interesting how some of these life insurance companies have just not performed, right? If you map a 3-4 year, look at HDFC Life, huge underperformer despite having all the ingredients of being a success in place.
Tax changes, regulations changes, so too much going on.
Too much going on. Okay, let's get back to the market now. Looks like we're headed for a decent opening actually. In about 30 seconds, you'll have the Nifty open for the day. Overall, it's been a steady set for them. Okay, in about 5 seconds now. Steady set for the market, but all eyes will be on the Bank Nifty and the first trade over there. Let's see. The first tick on the Nifty is in the green by about 20 odd points, 15 points now. Sensex is up about 50 odd points, so not a bad opening at all. Flat, but with a positive bias, something that the market would like as we could be perhaps building on to our gains. Let's take it to the advance decline ratio because that is in favor of the advances. Almost 1,400 stocks on the advancing side. So definitely the broader market is also not looking too bad. The Bank Nifty is the one that is in focus this morning. The Nifty Bank up 260 points, advancing towards that 52,000 mark. Fresh record highs for the Bank Nifty day after day, and a lot of individual banks are in focus. HDFC Bank, I would like to get that one up because there's a bit of delivery buying that has gone up in that bank. Not just that, the stock, HDFC Bank is now up 15% if you look at it month on month between last month and now. So at 1,660 on HDFC Bank. Apart from that, Kotak Mahindra Bank is the one that we're looking at this morning. Macquarie has upgraded Kotak Mahindra Bank to outperform. And in fact, Macquarie likes a lot of the private sector banks rather than public. So Kotak Mahindra Bank is now up almost about 1.5%. Apart from that, I would also like to take a look at SBI because, there is some Macquarie is actually underweight on SBI. So just pull up that one. It's down about 0.2%. PNB Housing Finance, by the way, in focus as 0.5% equity has changed hands. So do keep an eye out on that. On the flip side, though, you have IT stocks that are under pressure. Telecom, Wipro, TCS, Infosys, all down anywhere between 0.5% to 1%. Nothing alarming. But it's banks on the upside and it is IT on the downside.
All right. Well, a few stocks that are reacting to news flow. MAS Financial, well, they'll raise money via QIP. That in turn will improve some of their return ratios. That stock, in fact, has opened up with a gain of closure around 4.5%. PNB Housing Finance, well, that one's under pressure. It's down closure around 4% odd. A few more notable movers. You have Som Distilleries. Their license got suspended in Madhya Pradesh. So that's down closure around 5% now as we speak. And Lurch Avenues, the one that recently listed, it rocketed the last couple of sessions, down closer around 4% as we speak. A few more notable movers on the upside. GMR Palm, that deal with regard to the smart meters, that stock's up closer around 5%. Jyoti Structures is up closer around 5%. Suzlon is up closer around 4.5%. And Bansali Engineering as well is up closer on 3.5%. So those are some of the top volume movers. And Delta Corp opens up in the green. There are hopes that there could be some kind of relief on the retrospective basis. So that's why that stock as well has opened up the gain of around 2%.
Lots of stocks reacting to news. Look at Tanfac. They've done an agreement with a Japanese specialty chemicals company. The value of that agreement is about 80-odd million. That stock's soaring away. Then CE Infosystems and Uno Minda. Goldman Sachs has singled out these stocks. I mean, that's a positive brokerage commentary coming in for both. And they're really reacting. CE Info is up about 9%. Uno Minda is zooming about 7% higher. Sapphire is looking at a stock split. Sapphire Foods up about 5% in trade on the back of that. RateGain had a block deal. So that one's reacting quite positively as well. By the way, Tata Technologies was a negative call by Goldman Sachs when it pointed out a couple of these mid caps, and that stock is actually down about 1% as we see it. What else? Suzlon Energy, 4% higher. Brigade is having a good morning, about 4.5% higher. I think Brigade was one of the stocks that Sriram was also talking about, a potential MSCI review maybe in August. Anyway, talk about some more. Sansera Engineering's after yesterday's big block is still in focus, up about 3%. GMR Power is up 5%. Watch for this stock. They want to get into smart meters. And it's up about 5% on the back of that possibility. Advanced Enzymes, I mean, those are the names. But actually, once again, just like yesterday, the mid-cap index has slipped into the negative. There's a lot of profit-taking continuing on the PSU names, so watch out for that trend. PFC, REC, BEL, RVNL, BHEL, HUDCO, RailTel, a lot of these Aircon, a lot of these PSU stocks are losing anywhere between 2% to 5% as the profit-taking sets in the Nifty is very quiet. And again, this is like a screen that's mirroring yesterday where the bank Nifty is doing well thanks to FPI flows that have started trickling in, but nothing else in the market is quite performing. Apart from banks, we don't have support. We don't even have support from IT today. So that's a bit of a non-starter. On the downside for the Nifty, the profit-taking in auto is continuing. And there are also some names on the tech side, which are on the lower side of the screen. So Infosys is down about 0.5%. Very quiet, getting extremely quiet. And it's just about banks. That is the trade as the money is still going in. All right, so that's the market for now. Let's get some perspective then with our market master. Krishna Sanghvi, Chief Investment Officer Equities at Mahindra Manulife Investment Management, is with us in the studios now. Krishna, great to have you right here with us. The market's not used to pauses, right? This market runs on steroids. It's almost making all-time highs on a daily basis. But pauses can be healthy. They can be very good. What do you make of things right now? I mean, is it tough to find stocks at your buy price? Or do you think this is a multi-year bull run? So why worry?
Yeah, it's a combination. Clearly, it's tough to buy a stock where you're comfortable at that point of entry valuations. At the same time, if you really decide to have a longer time frame, then something life becomes easier. Unfortunately, you don't know how much, in a way, from a time-wise, you're overpaying today. Because very fact you're willing to buy in 3 and 5 year down the line earnings means it's really overpriced for the time being. And so all you need is maybe incremental, dose of order book, incremental dose of, positive announcements which possibly can help. But yeah, clearly many of these companies right now are in a situation where at least FY26 is nicely discounted and one has to stretch in terms of looking beyond.
Okay. Krishna, hi, good morning. And, thank you for being here with us in the studio. Appreciate it. How are you reading into this move in banks? Because suddenly, it's become everyone's favorite. Private sector banks have underperformed for 12 to 18 months.
Yes.
But do you think that's the only reason, underperformance, or is there some fundamental trigger for this move in banks?
Yeah, so I think markets are always going to be a combination of both, some fundamental as well as this. So I think if you look from a relative earning perspective, maybe banks still offer a nice spot where if you go back 6 months back, maybe there was expectation of a rate cut, and as we know, when the asset price starts reprice downward much faster, banks could have some impact. Now where we are today, maybe that rate cuts looks reasonably difficult, or the intensity can be far lower. That is one part, which is the earning side. I think if you look from a market ownership perspective, clearly that's the other angle, which says that they have underperformed beyond a point. They're all good franchises, best of situations on margin front, on credit cost front. So that's the other angle, which says companies are good. Maybe they've not moved much in last, 6-12 months. They were definitely added income. They've added profits. The book values have grown. It's just, from a relative perspective, maybe the over ownership somewhere has hurt, because when some other segment of markets started doing well in terms of economy, not necessarily only equity markets. So people, would have shielded some portion of money, and, in a way, financials would have been a natural port of call considering the ownership, pattern. So that's where some money gets taken out to invest somewhere else.
All right. Hi, Krishna. Good to see you in the studio. Give us a couple of, numbers and your analysis of the same. Prior to this election outcome, everyone was going gung-ho on the capex themes.
Yes.
Now, suddenly, post the outcome, people are talking more about consumption themes. But that lasted for all of 3 days. When you saw the FMCG names do very, very well. And the street said, maybe you have to rejig yourself from capex to consumption. Would you look at buying some of these consumption stocks, or do you think that the capex has a far longer runway, so you rather stick to those themes itself?
No, sure. I think, let's look at macro picture of economy. I think all sectors are interlinked. We have, this concept of profit pool participation, where some sectors lead the earning growth, some sectors, lag it, but net, economy keeps on growing. Or if you look at last 10, 15, 20-year cycle, you will always find those spots where, where a particular sector looks really good. Unfortunately, somewhere, the valuation call starts coming into play, saying that it's good, but at what price and what's the incremental, return expectations. I think if you link to election, primarily, I think, let's face it, we actually in the same continuation phase. So nothing incrementally, is different. A lot of capex announcement which would have happened earlier are possibly likely to continue. So it's going to be more of a valuation call, and that's where, the thought process comes in, is that as and when some of those capex cycles which was initiated some time back starts getting played out. See, what's the end game of capex cycle, right? End game of capex cycle is higher manufacturing, which creates, income for people who are employed. So it's, job creation, it's some Indian factors of production being paid out, as a part of this cycle. So to that extent, consumption is a natural beneficiary, as people learn, let's not forget, my expense is somebody's income, and that, when the other person starts spending, the third person starts earning. So I think that's how this cycle of capex consumption gets played out, over time.
So let's talk about the portfolio construct. In general, given that this is a market, like you said, where valuations are pretty hot in most pockets, which are incrementally, what are your current overweights? And incrementally, when you have to put fresh money to work, which are the areas where you still have some valuation comfort?
Sure. So I think traditionally, for last 12-18 months, capex cycle was clearly an area of, overweight, and that's possibly helped, our portfolios as well. So that's been one part. At the same time, as I mentioned, valuation is something which is reasonably attractive or, cheap 1.5 years back. It's no more the case. So to an extent, valuation-based adjustments to portfolios and maybe private banks, maybe, consumption. And within consumption, honestly, it's a nice basket, right? You got FMCG on one side, you got consumer durables, you got within that lower price point, products versus a higher price point. So I think that range is there. So little bit consumption tilt on an incremental basis clearly helps,
But, let me ask you a follow-up on that. The reason why the market was not buying FMCG, of course, it was always under-owned and the valuations were always good. Well, because do you want to buy something that's going to give you 4-5% growth, right? Whereas something like an ABB or a Siemens or a HAL, though trading at 50 times to 100 times, was still, giving you the prospects of more growth going
No,
ahead.
agreed. So that's a tough call. That's where everyone gets into valuation and our own understanding of how long this cycle is going to last.
So what do you think there's going to be a change? Do you expect higher growth? I mean, the under ownership argument is well taken on FMCG, but will growth come back?
So that's a growth argument which says that if those capexes which were created or planned some time back are going to be operational in next 12 months, so the job creation starts, right? Because what does consumption need? Income growth for people. Now, people at relatively higher end of income possibly are not going to be impacted by incremental income generation, but at the same time, people in the mass segment, average income can shoot up because of economic activity picking up. That's the end game, right? It's a cycle. Companies produce things and create jobs for people. So that's
So just to complete the loop on this, have you started booking profits on the capex side of your portfolio?
Yeah, I guess valuation led, some reduction. That's where as a portfolio is constant, right? Finally, it's 100%. So if you want to buy something else, you need to review something else also.
Okay. Well, just a last question from my end. We have the big budget coming up, and this is going to be a different one because this is after the third time that the government is getting re-elected, right? So I'm sure they have some aces up their sleeve. What do you think the government will announce which could perhaps improve the mood of the market? I mean, from a market perspective, what are you looking at?
Yeah, honestly, market mood is good, right? so as she was mentioning steroids, so I don't think market mood needs something booster. I think bigger parties perhaps nice roadmap of next 5-year thought process. Because it's the first budget in a way, though it's a continuation of the government on every front, including the ministry. But yeah, to that extent, what is a new agenda for next 5 years possibly can be one. Otherwise, broadly, it's continuity. I think the fiscal consolidation, which we've been going through, is reasonably good. Luckily, tax collections are nicely supporting. So I think those macro factors will not be really something different on even from a budget perspective, apart from saying that some 5-year plan, which is...
But do you think the focus area will continue to be from a market and a budget standpoint, things like manufacturing, perhaps defense, affordable housing? These are spaces that the government has been big on lately.
Yes. So I think that remains. I don't think that incrementally changes because that's what, maybe the roadmap for next, 5-7 years of this decade are all about.
Okay, all right, Krishna. Thanks a lot for stopping by and giving us your view on markets in various sectors as well that we discussed. Wishing you a good day ahead.
Thank you.
Thank you.
Well, let's get straight to a CNBC-TV18 exclusive then. Mr. Anil Agarwal, the founder and non-executive chairman at Vedanta, believes that the metal industry is in for a super cycle. I caught up with him to discuss their business outlook. Let's listen into excerpts of that conversation as he talks on his EBITDA target, demerger plans, and says he expects a valuation of around $1.2 billion per million ton for his steel assets. Let's listen in.
$10 billion is if you look at, we are the largest producer of zinc, silver. We are the only people in India doing the largest recycling of our slag, which is the most environmental friendly. So we are very, very, very confident. Aluminium, we are the largest producer, 3 million ton integrated, everything. If you look at our iron ore, we are going to produce 70 million ton of iron ore. If you look at our oil and gas, I'm so excited about oil and gas. We have offshore, we have onshore. We are the people who are producing and started exploring and the drilling program in the Northeast, especially in Big Boy and all the Assam area. So very excited about oil and gas. Each of our assets are a trophy asset.
Now, you've talked about all these businesses, put it together, but also what the street is looking forward to is the demerger of these businesses. Could you tell us the timelines and have approvals come through?
Yeah, it's all done. It's all, we have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally takes 3-4 months time, but sometimes they can take 1 or 2 months more also.
The other focal point, Mr. Agarwal, is the steel business. I'm aware that you're in conversation with various buyers and, maybe in the next couple of quarters that should get closed out. How sure are you? In the first half of this fiscal year, should we see that steel asset getting sold at a good valuation? You want to give us a hint of the valuation you're looking for?
See, first of all, on the demerger, it was absolutely important because each of our business is a independent business. And my vision is to time to come, each of the 6 businesses will be as big as Vedanta itself. Because the huge demand and the demand is double-digit growth. So I'm very excited about to create value for my shareholder. Each of my shareholder will get, if he has a 1 share of Vedanta, will get 6 shares of demerged company. So that was on demerger, and that was the right thing to do, making a very strong with the management. As far as the steel is concerned, steel, we are one of the best prime location of a steel asset, which is in Jharkhand, near Bokaro, is in the Bokaro. We have a proximity of all the raw material, iron ore and the coal. We are proximity of all the railways. We are proximity of all the gas. So this is the best location for anybody to start production of steel. Very clearly, our Prime Minister has said that there will be 300 million ton of steel production. And India is at the moment producing only 120,000 ton. So the huge demand-supply gap in steel. So this is the one thing which is a brownfield, which can produce 20 million ton of steel. So we have put this asset on the basis that if we get 1.2 billion per million ton, we have a 3.5 million ton of plant, which at the moment we are producing close to 2 million. 3.5 will be by end of this year. So we are 100% sure that if we get $1.4 billion and get not a distress sale, if somebody has a vision to produce, take it forward, we will look at, and if we get a price of $1.2 billion per million ton, we may consider to take the view.
All right. So your ask is that per million ton, you want around $1.2 billion. Are we getting that correct?
3.5 million ton. 3.5 million ton.
So what is the total valuation you're seeking for this 3.5 million ton plant?
Yeah, around 4.5.
4.5. Okay. All right. That appears to be a tall ask. And how confident are you that you see, this getting closed out in the first half of the fiscal or sometime during the fiscal itself?
We are very comfortable. Every of our shareholders want us to be in the steel business. We are already producing almost 2 million ton steel in Goa. So both put it together, it will be 5.5 million ton. We have strategically decided not to be in a steel business or become very big in the steel business. So we are getting very good response internationally and nationally. This is a very good, if you look at, this is the norms of the price, 1.2 billion, because the assets are not available. If anything comes, we look at, otherwise we'll keep expanding our plant.
Let's talk about the zinc assets as well. That stock price itself of Hindustan Zinc has more than doubled in this calendar year itself. Any conversation with the government of India? We were talking about an OFS as well a few months ago. When do you expect that to happen?
See, zinc we are the only producer in the world as a major producer. If you produce 300 million ton of steel, which is India going to produce 300 million ton of steel, then you need 3 million ton of zinc production. We are only producing 1.2 million ton. So it is a question, and no, you cannot start zinc mines again. So this is the one which is the business which we are going to expand at least 2 million ton time to come, because that is the requirement. I'm always averse about import. So very excited about Hindustan Zinc. Hindustan Zinc can be any price. It can be $100 billion company, It is a company, and whenever government want to sell, they can sell. It is up to them.
All right, but you haven't heard about a potential OFS in the near term?
We hear every time, it is always in the government's mind to sell the shares. They call us, they decide us, they give the mandate to the bank, but action has to be taken, and I'm sure something will happen.
What about at the parent level? That's the fear from a India stockholder's point of view. How is Vedanta Resources placed? On the debt, in the last few years, you've gradually been repaying some debt. And now you're far more comfortable if you even talk about it, in comparison to what it was 2 years ago. It was close to around $10 billion, which has come down drastically. What's your message to the shareholders here of Vedanta Limited? And what's the deleveraging plan at Vedanta Resources?
See, the total debt on the Vedanta Resources, Vedanta Limited is the subsidiary of Vedanta Resources. All put it together, the total debt in the company is $12.5 billion, which is not even one and a half time or 1.2 time of the profit what we made. As far as the total debt on the top is concerned, we have the trophy asset on the top, which is, we own the largest copper deposit of the world called Kankula Copper Mine, which is on the top. And we are looking, people are looking forward from us. Would you like to dilute some equity into the KCM? We haven't thought anything so far. I think we are very comfortable to address the debt. We have a good cash flow and good dividend that should take care of all the debt payment of VRL.
Could you look at folding in KCM into the listed entity Vedanta Limited? Would that be an option?
I don't know. At the moment, it is with the private company on the top. I'm ready to do anything possible which can help my shareholder. Okay. And I promise that the first preference of Kankula Copper Mine, copper will go to India.
Okay, all right. The Vedanta Limited stock, that's bounced back, and it's bounced back in a huge manner. What's the plans with regard to your holding in the company? It's come down a little bit to around 61.5% or thereabouts. Will you look to reduce stake further? And also, are there any plans of diluting equity?
We have 62%, 61 point something percent of holding on the of the company, and we are comfortable. Any investment bankers comes and gives me some idea, we will work on. At this point of time, there is nothing on the card to take our holding down below 61.5%.
Okay, that's a very exclusive conversation with Anil Agarwal of Vedanta. But let's just take one look at the market because it's getting a bit volatile now. The Nifty, in fact, is down. It's down almost about 70 odd points, and all this in the last 10-15 odd minutes. If we can just get the Nifty up for you in a bit. The mid-cap index is also coming in for some profit taking. We'll just wait by for that to come up on the screen as well. Remember, things have been tricky for the last couple of days, but today doesn't look like it is a good start to trade at all. Still waiting. There you go. Okay, 30 points lower now on the Nifty actually, and the mid-cap index, okay, holding in the green. Let's slip into a quick break. Up next, Adish Patil of Aarti Drugs will join in to talk about their business outlook. Later, we'll connect with Dinesh Kumar Khara of SBI to discuss their business outlook as well. Stay tuned.
Welcome back. Well, let's focus on Aarti Drugs then. Now, that's the stock on our radar as the company's Tarapur unit in Maharashtra had a fire incident which caused temporary disruption of production. Mr. Adish Patel, the CFO of Aarti Drugs, joins us on the show. Hi, Adish. Good morning and good to see you in. Well, with regard to this disruption that we have seen at this unit, could you quantify it on the financials? What was the potential revenue loss because of this fire?
Yeah, so this happened actually just outside the plant of one of our anti-inflammatory drug. So that drug contributes to around less than 3.5% to the overall sales. So that way it is not big. And as far as the fixed asset loss is concerned, we are estimating, it is a rough estimate, that it will be below 1 year. And we do have IAR policy, which will cover this loss. So from the loss point of view, it is not much, but it might cause a production disruption for around 10 to 12 days, probably. This is just a rough estimate.
Okay, so 10 to 12 days of production disruption, but you don't see any kind of loss. Any timeline that you can give us on how long the operations could be suspended?
Yeah, so probably in 12 days or so, we will try to resume the operations. But that is just for the one product. Rest of the products are working fine.
Okay, okay. So in 12 days, you'll resume operations. Got that. So good to hear that, the losses are also temporary for you and fairly small in amount. Let's get to the business then. You had said earlier that your margins can improve by an additional 100 basis points. I think you've seen about, in Q4, your margins improved to the best levels in many quarters. So what is the kind of guidance that you have? What are the margin levers for the company?
Yeah, so the main margin lever for the EBITDA would be gross margins itself. So we are estimating that this first quarter of this financial year will be even better as respect to the previous quarter, maybe by 0.5% or so. That is totally because of the base effect and the normalization of the prices versus the input cost. On the side, we are also doing a lot of process R&D to improve the efficiency of the process, which will also lead to better gross contribution. The only hold-up for the first quarter might be that we just had started our salicylic acid plant. So because of some equipment problem, we were not able to fully scale up. But then we will be expensing out all the depreciation and the interest costs, which might hit P&L a little bit in the first quarter.
Okay. Just if you could help us with an update on the overall revenue targets that you have for the year, Adesh. I think earlier the longer term revenue target was about 4,000 to 4,500 crores of sales. That was over a longer roadmap, 3 to 5 years. Right. And then, you have a capex plan also coming on stream. Could you give us a slightly more near-term target? How is FY25 looking from a revenue standpoint?
So for this longer-term target, there were two main greenfield projects which were ongoing. One of which was salicylic acid, which we have just started in last quarter. Just teething problems are there, but we'll be sorting out soon, and probably within 5-6 months, we'll be able to streamline the production. And as far the other backward integration project was concerned in Saika, that will be coming online in next quarter. So both these projects will help us boost our top line as well as the margins because of backward integration. And the near-term target for this current financial year, we were estimating around a good double-digit volume growth, but we are also expecting negative rate variance in the first half of the year. That was because last 4 quarters, sequentially the price, input cost, as well as the selling prices were going down. So we are estimating that probably with respect to the June 2024, that is the last financial year quarter, there might be still 10 to 11% price degrowth.
Oh, okay. So 10 to 11% price degrowth in the June quarter. So what is the expectation? Do you think it will start normalizing by the second half? That's what we're hearing from at least some companies. And again, then where do you stand? You did revenue of around 2,500 crores in the previous fiscal. So again, going back long-term roadmap, we get 4,000 crores. But this year, is it realistic to expect that at least you'll start growing again? Because last year was a dip in the top line.
Yeah, so last year it was totally because of the rate variance. We actually had a good volume growth, but because of the rate variance, it went down. But in spite of that, in spite of the selling prices going down, our gross contribution kept on improving. So that is a very good sign.
No, but when do you expect a recovery in pricing? Like you're saying, the price erosion is quite significant in the June quarter. What are you expecting in Q2, Q3?
Yeah, so right now, if we see last financial year, the prices kept on falling every quarter. June it was higher, September it was lower than June, then December it was even lower, and March was lower, and it stabilized at that point. So if we compare with respect to previous quarter, that is the March quarter, probably there won't be much negative rate variance in June quarter.
Okay, earlier your long-term revenue target was to achieve 4,000 to 4,500 crores of sales in about 3 to 5 years. Just to get back to that discussion, Is that still on track? And what do you think the long-term levers could be for the company?
Yeah, so that is quite on track. So there are two greenfield projects which I just spoke about, and other is the formulation business, which is also growing. We just had USFDA inspection for our oncology plant of formulation. And plus, we are also expecting a UK MHRA inspection very soon for the OSD facility adjoining it. So our formulation business is right on track, and we are targeting export market for formulations. And already we have crossed around 50 to 55% of the top line is now coming from the export market for formulation. So that is right on track. And the other part was about the greenfield expansions, which we are doing at the API, spec chem, and even intermediate side.
Okay, we'll leave it at that, Adish. Thanks a lot for joining in. Appreciate it here on CNBC TV18. Well, that is Aarti Drugs. But for the market, still slightly down, but not out, actually, you'd have to say. I think now the fall from the day's high is getting a bit worse. So just pull up the Nifty. I think there is about,
23
look
points.
at that. Yeah, it's down about 23 points. But from the highs of the day, which was at where we started off, I think it's about an 80-90 point fall. So it's getting a bit volatile. I mean, look at the jagged edges on the screen. But still, largely, you'd have to say consolidation with a bit of a negative bias.
But, you know, today, Sonia, it's a different day from yesterday because we don't have the big, you know,
Global
bazooka, we don't have the US market, of course, but the big bazooka bank trade that started yesterday, it's really fizzled out. The bank Nifty isn't doing much. I mean, it's barely trying to hold on by the skin of its teeth. The good news for the market is that mid-caps are seeing buying again. The mid-cap index had started a little subdued in the morning, but again, now it's moving higher. By the way, we have a very special guest who will join us, you know, in, I think, the next couple of minutes on the show. I think we do have him right here with us, Mr. Dinesh Kumar Khara, Chairman of State Bank of India. Mr. Khara, it's great to have you. Pleasure to have you with us on the show today. Lots to talk about, including the environment, you know, policy roadmap and how you're seeing, of course, lending trends shape out. But tell us, I mean, we're rounding up the first quarter of this year. How is the sentiment on ground? And I think when we started the year, the whole premise was whether this will be the year when corporate credit will really start taking off. Do you see signs of that happening?
Good morning. First of all, thank you very much for having me on your channel. Well, of course, what we expected, we actually get to see on the ground, and also the kind of initiatives which are now being taken in terms of push to the infrastructure. So I think this will eventually culminate into growth all around, and this will be seen in terms of growth in SME, growth in private borrowing also. So I think it's a very positive sign which you get to see on the ground, and hopefully monsoons will also turn out to be good this year. So which also means that the rural economy will also be looking up. That's how we are reading the things currently.
So it will really, it always helps. And I apologize for this, but we have to look at some numbers. So if you could put some numbers to it, you know, what is the target for you that you've set forth in terms of credit offtake this year? And how much will be driven by rural? I mean, what will be the target on the rural side? And how much, again, I'm going back to the question, corporate credit growth, what can be the numbers or some range that you think we'll get this year for SBI?
Yeah, sure. We are hoping to see the credit growth in the range of about 14 to 16%. And we expect to see very broad-based growth in credit, right from SME, agriculture, retail, and also in the corporate. So this is something which you have already planned for the current year, and we get to have a similar sense when we see the activity on the ground that there is enough ample demand. That is something which is quite encouraging.
You know, sir, just a question on credit growth, and we'll have Lata joining in the next couple of seconds as well. You know, I remember the previous RBI policy, and I remember categorically what the governor stated. He said, oh, no, this is unsecured lending, and he said, we are watching all the incoming data very, very carefully, and then we'll evaluate whether any further steps need to be taken. What's your sense on unsecured? There's been a marked slowdown. The FY24 numbers, if I remember the numbers correctly, from 23% growth on the unsecured side, it came down to 17%. What are the trends now? And, you know, would you anticipate any more central bank action on this?
I think as far as unsecured credit is concerned, at the material point of time, we were seeing that there were many entrants into the unsecured lending space. And also they were getting into lending without really evaluating the repayment capabilities, and that is the reason why RBI came down in terms of increasing the risk weights. But what we observe is that as far as we are concerned in State Bank of India, our unsecured loan book is pretty good, because we are actually offering unsecured loans to those who are maintaining their salary accounts with us. So that is one of the reasons why perhaps in terms of our quality as far as the unsecured loan book is concerned, it is the best. So we are seeing the growth which is reasonable in terms of what we have seen in the previous year as far as unsecured credit is concerned. So I think we don't see any challenge as far as our unsecured credit book is concerned.
Mr. Khara, more than credit, I guess it's deposits that all of you bankers are chasing after. What is the state? Do you still have to up? Does the system have to still up deposit rates?
Well, as far as deposits are concerned, it is normally seen during the inflationary conditions that depositors normally chase for the better yield instruments.
So there is no inflation now. There's no inflation now, sir. It's below 5.
No. But at the same time, we have always seen that, in such situations, people would be looking at a real return, and which would be plus of the inflation, whatever it is. So that being the scenario, that is something which you have seen, that moving of money from the deposit to the markets. I always believe that there is a process of stabilization in all these markets. So we hope to see some kind of a stabilization in this trend also. What we have already seen, if at all it is some kind of an indication. If we compare on growth in deposit on a first quarter basis, we have seen a slight improvement in the deposit growth for the banking system in the current quarter as compared to what we had seen in the previous quarter. Having said that, I must also mention that deposit is also a function of liquidity in the system, and liquidity in the system has been just adequate. So that is the other reason why perhaps not excess liquidity being in the system is also one of the reasons for the kind of trend which we have seen. But yes, of course, when it comes to CASA, it is almost at a pre-COVID level. So I think, of course, it has come down as compared to what we have seen during the COVID. So it should not be as much of an alarming situation for the system. But nevertheless, yes, this is a reality in which.
So is quarter on quarter your current and savings have improved as a percentage of the total deposits?
Absolutely.
So what does all this mean for margins? If not current and savings, but time deposits are still being chased by bankers, should we expect some margin, crunch for the banking system and for yourself?
I think for the banking system, I have not got a clear visibility of the data. I would not be in a position to comment. But as far as we are concerned, we have slightly tweaked our deposit rates in some structure, in some periods for the term deposit. And likewise, we have also tweaked our MCLR because there was elbow room which was available. Yes. And that was something which helps us in ensuring that there should not be any impact on the NIM. And we, as far as we are concerned, our domestic NIM last year was 3.43. So I expect our domestic NIM should be around the same number.
Oh, that's good to hear, because there was a worry about a few basis points lower NIMs for banks. Now to come to what Surabhi was asking you about loan quality. We hear about MFI loans under pressure. We hear about unsecured loans under pressure, credit card loans under pressure. What's the situation in SBI?
As far as we are concerned, we don't have a challenge as far as our unsecured book is concerned. I've said it in the past also. And even now also, I maintain my stance. Because when it comes to our unsecured book, we are extending that to those who are maintaining their salary accounts. We have got a very clear visibility of the money flowing into their accounts. And we are very mindful in terms of their repayment capability, etc. So we don't have any challenge, and our unsecured book stays as good as it used to be in the past. And
but
as far as
MFIs
are concerned, well, of course, I think the rural went through some challenges at some point of time, but now we are seeing positive trends. But yes, of course, we do hear from MFIs who are having a loan book that there were some challenges. But I think as far as we are concerned, we don't see any kind of a stress. In fact, in our case, we are seeing even better trajectory as far as the loan growth to the MFIs are also concerned, and also the quality of the loan book also for the MFIs.
Okay, that's good to hear. Now, the big trend, and yesterday we went, gangbusters reporting it, is the way in which promoters are taking advantage of this stock market largesse. So much of either fundraising or people, selling off their holdings. When are you coming to the market? You have a lot of subsidiaries.
No, as and when there would be a felt need, we will certainly reach out to the market, but we look at all possible options and we evaluate them well in terms of the cost. So that is something which is a deciding factor and the guiding factor for us. So
when you need, the market won't be kind. And in any case, your CET1 is lower than other banks, maybe with good reason. You have a huge government holding as well. But nevertheless, you can want your CET1 to be equal to the other banks if you wish. The market is kind. So should we expect anything?
I would like to give a perspective when people talk about the CET1. The CET1 should be seen in the context of the RWAs. And, if at all my CET1 is being compared, when my RWAs are 52%, is being compared with somebody who has got an RW of 85%, it's not a fair assessment. So I think that has to be kept in mind. So from that perspective, in fact, what we have seen is that in last about 3 years' time, we have brought back about 1.10 trillion worth of profit into the balance sheet. So that itself has given us the muscle. And even at the current level also, we have got adequate...
No, Mr. Khara, I'm not alleging that your balance sheet is weak. I'm only saying that you can always want to... You can always want to increase the CET1 because the market is in a good spot. So anyway, without all these arguments, are you looking to tap the market, and which subsidiary would you look at?
As far as subsidiaries are concerned, we have not yet given a thought. And as far as bank is concerned, we certainly intend to raise some money from the market, which should be either in terms of bonds.
Okay.
So that is something which have already come on. It is already in the media also. And we keep on evaluating our balance sheet position. And even at the current level, we can safely support another 7 trillion worth of asset growth. But yes, of course, we keep on evaluating our capital position. And at the right and opportune time, if need be, we will reach out.
So not ruling out an equity capital raise this year, sir? You're not ruling it out. It could happen.
So I always keep the options open.
Okay. So one more expected credit loss. One minute.
Get on that. Lata, that's exactly what I was asking.
Yeah, expected credit loss, sir. Are you expecting RBI to pursue it? What is the status now?
Regarding? Sorry, I could not get
expected credit loss rules. The expected credit loss rules.
I think if at all it comes for banks like us, we have got excess position which is there with us. It will be rather good. But yes, of course, it is a decision which has to be taken by the RBI.
Okay, so that is on ECL. I mean, in the past, you've had a view on it that perhaps it's not something to be sort of too concerned about. But just any further sense on if the norms come in the format in which they were discussed, then what could that mean for SBI? That's on one hand. And the other burner that we've got burning is on project financing, right? You said right now there's no risk on the horizon, but the RBI is clearly trying to shore up the buffers, as the credit cycle picks up on the corporate side. So on the project financing norms and the higher provisioning requirements that are being spoken of, what's your view there?
See, as far as ECL is concerned, first and foremost, I would say that over the period of time, the loan book of the banking system has improved significantly. So if the ECL comes, perhaps whatever competition was done, maybe about a year back, we would be, banking system would be much better. And we are certainly much better as compared to where we were last year. So I think from that point of view, we don't expect any kind of an impact on us as far as the ECL is concerned. Your second question relating to the provisioning for the project
financing.
Yeah, it was essentially, as of now, it's a discussion paper. I think the deliberations are going on. Various stakeholders are reaching out to RBI with their views. I'm quite confident that RBI will be giving due cognizance to the viewpoint of various stakeholders and will come out with some kind of a measure which will be balanced in terms of its nature. So that's what my sense is. But yes, of course, we are evaluating. For us, we are not envisaging any challenge. But yes, of course, we are very mindful of the views of various stakeholders, and we have to keep that in mind.
So provisions may go up, you think, if it is almost the way the discussion paper is?
No, again, if at all it comes through the ECL structure, then perhaps it will undergo a significant change.
Okay, so I think we have to just wait by and see what the final guidelines are on this. And then, of course, we'd really be happy to get your perspective on it. Thank you very much, sir. Great conversation with you. Really appreciate you taking out the time this morning. Right, that is the word. Thank you so much. That is the word from State Bank of India. Right now, we have to quickly get back to the market. We have Mitesh joining in, and the market's been fairly volatile with the mid-caps outperforming, but the other large indices are absolutely quiet and flat. Mitesh, what are your trades now?
So as I said in the morning, I think today is one day when we have got some sell calls, and I think there's some choppiness. I think there's some that signs of early profit booking is playing out. But right now I have a buy on AB Capital, which has managed to get past the pivot of 240. So keep a stop at about 239, maybe even 238.5, and look for a target of roughly around 260 on the upside to begin with. We can eventually look at higher levels. And the other stock which will have is sell on Bajaj Finserv. We've been bullish on financials and the private sector banks, but Bajaj Finserv is showing some signs of profit booking. So we'll keep a tight stop at about 1600 and look for a target of around 1540.
Okay, all right, got it. Mitesh, thanks very much for those trades. We'll have to take a quick break on that note. We'll come back on the other side and we'll put the spotlight on the commodity space with Manisha Gupta. Stay tuned. Welcome back. As promised, let's put the spotlight now on the commodities space. We've got Manisha joining in with the commodity that she's tracking today. Which one is on your radar today, Manisha?
Sylvie, thank you for that. Well, I'm looking at the agriculture commodities, and the big news clearly in last 24 hours has been the MSP hike for those 14 commodities for the year 2024-25. Well, usually this number comes in the first week of June, but then we were busy with elections and counting, and is the reason we're looking at these numbers now by the third week of this month here. Well, the higher prices are expected to encourage more sowing. The farmers will get nearly 2 lakh crores as MSP for this new season, which is higher by almost 35,000 crores as compared to the previous season there. But there is rising cost of production. We've seen electricity prices gain up, the fertilizer prices on the higher side as well, technology, views, etc. has all gone up, and so has the cost of the environment-friendly seeds as well. So all of that is added into the price, and then 1.5 times is how the MSP has been decided. It is the CSCP recommendations that you get from all states, and an average of that is what center decides as in cents of the commodity. Well, remember, the government has put various restrictions on exports of rice and wheat and sugar, and we saw various steps being taken by the government in last 6 or 8 months in sense of controlling inflation there. We also have imports of various pulses and edible oils coming in at a zero duty also. So if we are looking at a good monsoon, a higher MSP and a good production, then we could be looking at all of those curbs changing as well, all of those restrictions being eased as well. So take a look at the numbers then, and we have seen MSP being hiked between 1.4% to 12.7% on the higher side. I'll start with paddy, and that's the most favorite of crops. 5.4% is a moderate change coming in for that. And this is about millets or coarse cereals, where we are looking at 6 to 11% of a hike in sense of MSP. Well, this is an area that the government has been promoting for some time. Maize, 6.5% of a hike in MSP, and this is important as well because maize is food and feed and fuel as well, and we are importing some maize at this point in time. Pulses, the inflation has been much on the higher side. Tur and urad have been a bit of a concern, so we've seen 6 to 8% of a hike coming come in for this one. Moong, the MSP hike has been quite strong in last 4 or 5 years. So we're looking at a much lower at 1.4% there. The edible oils as well have seen good gains, 6 to 6.5% of a jump up in sense of MSP hike has come in for this one as well. Now, importantly, when you look at the last a couple of decades or so, we really have seen the food prices jump up. Well, the hikes that we have seen for 2024-25, well, this is about cotton as well, 7% of a jump up coming in here as well. So this is on the higher side of it all. And Niger seed clearly is the highest one with 12.7% of a gain in sense of MSP here. So good amount there. The least has been Moong and the highest coming in for the Niger seed there. Now, this is what we've done in sense of paddy. In 2003 and 4, the paddy MSP was 550. We saw it double in next 10 years and then double again in next 10 years. And then we're looking at a 5% increase in last 1 year itself coming in for this one. So this is where your food inflation perhaps comes in from. The next one I want to show is about tuor. 2003 and 4, the MSP was 1,300. We've seen it double in last in a decade and then double yet again. And if you look at the last year and this year, it's a considerable jump that we've seen come in for tuor also. Moong is on your screens, and as I was telling you, this is a commodity that has seen very strong MSP increase in last 20 years. So this year, the last 1 year that is, it has been slightly on the lower side. Cotton should come in on your screen as well, and we have seen strong MSPs come in for this one as well. And from 1725, and this is something that the textile companies perhaps would also want to see. Interestingly, there are various reports now suggesting that in last 10 years, the MSP has increased by a CAGR of 10%, while the production has increased by a CAGR of just 2%. So even as we have been looking at hiking MSPs in last many years, the production clearly has not reciprocated in the same sense.
Okay, thanks a lot for that, Manisha. That's the update as far as the commodity space is concerned. The Nifty is largely flat, not doing too much at this point in time. So let's take stock of individual stocks. Ekta is joining in to tell us why you should be watching Sun Pharma this morning. Ekta, over to you.
Thanks for that. Well, Sun Pharma is in focus because their Dadra facility has received a warning letter from the US FDA. Now, remember that they already had received an official action indicated. It was inspected in December of 2023, received an official action indicated status, which indicates that there are regulatory issues on that particular facility in April of 2023, which is now escalated to a warning letter. The good part is that it's not received an import alert. If in case it was an import alert, it's most likely, generally what happens is that the import alert is issued directly before a warning letter. However, that is a risk that one will have to see if in case that does come about, because with a warning letter, what tends to happen is that production can still go on in the facility, while for an import alert, the production has to stop. Warning letter, there are no further new approvals which will come through. Now, in terms of the impact, this particular facility manufactures the API for Revlimid generic. So hence, that's probably going to be one of the key issues to watch out for. But otherwise, the street seems quite sanguine on a larger scale, because most companies, larger companies, have managed their regulatory issues quite well in the past, and that's the expectation. And once there was an OAI issued, the street was anticipating that it could probably escalate to a warning letter as well. Larger
okay,
scale,
thanks.
yeah, back to you.
No, please go ahead. Please go ahead.
Larger scale, Sun Pharma is facing an issue with the Halol facility as well as the Mohali facility. So this joins the list with them.
Okay, Ekta, thanks a lot for that. Well, that's on Sun Pharma and why it's down about 1.5%. But Sonal is with us to talk about office space solutions. Sonal, over to you.
Thank you so much for that. Well, the company just listed on the bourses, and this is the first earnings that we have from the company. This is, of course, Q4 earnings, but the numbers look good because this is the first time on a quarterly basis the company has seen profits. Revenues, they went up by 44%. EBITDA was up 35% to come in at 65 crore rupees. Profits at 1.3 crore rupees, which compares with a loss of 13.7 crore rupees on a YOY basis. If we look at the segmental breakup as well, the co-working spaces and the allied services, where the revenues grew by 27%. The construction and fit-out projects, the revenues went up by 150% to come in at 58 crore rupees. And if we map the trajectory in terms of losses as well in last couple of financial years, this is the year where losses have declined substantially versus the previous year losses of around anywhere between 42 to 57 crore rupees as well. The company said the exit monthly occupancy for FY25 stood at 71%, and the outlook is also very positive according to them.
Okay, thanks a lot for that, Sona. Let's slip into a quick break. On the other side, we start our pre-budget analysis. Lata will connect with Dinesh Kanabar, the CEO of Dhruva Advisors, and Sudhir Kapadia, the partner, tax and regulatory services at EY to check out what tax changes we can expect in this budget. Stay tuned.